The week began with the IMF's latest World Economic Outlook, projecting the global economy will shrink by 3% in 2020.
Now, this is a downgrade of 6.3 percentage points from January 2020, a major revision over a very short period of time. This makes the Great Lockdown the worst recession since the Great Depression and far worse than the global financial crises.
The IMF says the US economy will contract by almost 6% this year. In the first quarter of 2020, China's GDP shrank for the first time since the 1970s. But the IMF says the country will eke out modest growth of 1.2% this year. There's some skepticism, though, about the projections for emerging markets like India.
The driver for growth next year, as has been, for the last decade, is emerging markets. And those are areas which really haven't gotten hit yet, but we're expecting to sort of be most affected in the second or third wave of the COVID crisis. So we just don't know how this is going to play out in sub-Saharan Africa, in Latin America, in South Asia. And, so it's almost anybody's guess as to what those countries are going to experience in the fall.
This week, the World Bank also announced $160 billion in assistance over the next 15 months to respond to the COVID-19 pandemic. It says it will hit the world's poorest, most vulnerable countries the hardest. The G20 has agreed to freeze debt repayments for 76 countries, but there are calls for more assistance for low-income nations. Wrapping up a week of socially distanced press conferences, the IMF's managing director had a simple message for finance ministers and central banks.
Spend as much as you can, but keep the receipts.
A projected return to growth in 2021 will depend on that response and the pandemic fading away later in 2020. Giles Gibson, CGTN, Washington.